Good morning. The committee will come to order. We meet today to consider H.R. 9, the Small Business Tax Cut Act. This legislation will allow a business with fewer than 500 employees to take a tax deduction equal to 20% of their active business income, and applies to businesses and business owners who pay their taxes at the individual or corporate level. And whenever I'm talking with small business owners back home, the question I'm often asked is, what can Washington do to help small businesses so that they can expand their operations and hire new workers? There's no doubt that comprehensive tax reform that lowers rates and makes the code simpler and fairer is key to achieving that goal. And while we pursue comprehensive tax reform that give businesses of all sizes the certainty they need to invest and hire for the future, we need something that can help small businesses today. The Small Business Tax Cut Act provides the help that small businesses need right now. This deduction can free up resources so a small business can invest, hire another worker, or provide a raise to an employee, something too many employers haven't been able to do in this weak and slowly recovering economy. Small businesses will be able to take advantage of the deduction immediately in 2012, which can incentivize the job growth we need to help get Americans back to work. And small business owners in my district disagree. Michigan's been especially hard hit with double-digit unemployment rates over the last 3 years, and these business owners are the real experts who know what they need to add jobs back to our communities. And take, for example, Bob Yackel, the president of Merrill Tools. As part of the 400-employee Merrill Technologies Group, Mr. Yackel says, and I quote, "As a manufacturing business in mid-Michigan, we know firsthand the ramifications of the recent economic turmoil. The best way Washington can help energize economic growth is by making sure business owners are spending less on tax payments and more on creating jobs." Bob Yackel is a large small business owner, but there are smaller businesses that feel the same way. Jim Holton, owner of Mountain Town Station in Mount Pleasant, has served the central Michigan community as a restaurant owner for more than 15 years. And he's especially pleased with the simplicity and ease of this legislative approach. And he says the beauty of the Small Business Tax Cut Act is its simplicity. If you're earning profits and contributing to the economy, then you can take 20% off your tax bill. No hoops to jump through. This is a great way for business owners like myself in the Great Lakes Bay region and across America to help jumpstart our economy. Those are just two examples in Michigan's 4th District, but they echo small business owners across the country. Throughout our history, we've depended upon these industrious and innovative risk takers to help us move through these tough economic times. And while we work to provide them the long-term comprehensive tax reform they need, we can also take steps today to unlock new opportunities for them immediately. The Small Business Tax Cut Act is a bill that provides those much-needed immediate opportunities. And before I yield to the ranking member for any statement he wishes to make, I ask that all member opening statements be included in the record. Without objection, so ordered. Mr. Levin.
Thank you, Mr. Chairman. This bill is not a shot in the arm of economic growth. Rather, it is a shot in the dark. This bill is not targeted at job creation. The tax benefits it provides are not tied in any way to investment or hiring. It is arbitrary. H.R. 9 provides a complex tax benefit that depends on a number of arbitrary factors, such as the existence of other income, losses and deductions, and the classification of workers. It is expensive and inefficient. This one-year tax cut costs $46 billion. $46 billion. Revenue that could be better spent on provisions that promote hiring and investment, or on rebuilding our infrastructure. And I comment, there is still no agreement within the majority on a highway bill. Here we're providing $46 billion. This cost is not paid for here. So either the majority plans to add some undisclosed offsets later, or simply add to the deficit. Neither approach satisfies the test of fiscal responsibility by this distinguished committee. All of the eligibility restrictions that the chairman had previously placed on this provision are gone. This large tax cut that's being offered in the name of small business will now include 99.6% of enterprises, whatever their nature or whatever their function, including law firms, doctor offices, all types of consultants, grocery and liquor stores, to name just a few examples. But given that this committee has spent the last year and 3 months talking about tax reform, perhaps the most glaring thing about the Cantor bill is that it is the antithesis of tax reform. The House Republican budget assumes that this committee will produce a tax reform package with 2 income brackets, but offers no indication at all of how to finance rate reductions that could cost trillions of dollars. The only indication that we have gotten is that the budget chairman has said he will eliminate what he calls loopholes. These so-called loopholes would have to include provisions related to health, education, home mortgage interest, pensions. These are not loopholes. Each of them can and should be debated. But part of the reason tax reform is such a challenge is that each of these provisions was placed in the code to serve a clear policy purpose. I can only assume that the bill before us today would be considered another such loophole, though one with far less merit than the mortgage interest deduction or the health care exclusion. So since it is totally unclear how this bill would result in job creation, or how it would be paid for, or how it can be reconciled with the majority's or any other vision of tax reform, the only thing that is certain about this bill is its political purpose. The majority is obsessed with not picking winners and losers, and as a result, they have opposed all efforts to craft specific tax policies. This bill does indeed do the opposite. It scatters seeds to the wind, not aiming at any sources of growth, but hoping that some seeds might just germinate. They seem to think that they will reap some political benefit from this, but it certainly will not yield a real crop of new jobs for American workers.
The committee will now proceed to consideration of H.R. 9. Without objection, the bill will be considered as read and open for amendment at any point. I offer an amendment in the nature of a substitute which was distributed in advance along with a green sheet explaining it. Without objection, the amendment in the nature of a substitute shall be considered as read, open for amendment at any point, and considered base text for purpose of amendment. I'll now turn to Tom Barthold, Chief of Staff to the Joint Committee on Taxation, to provide the technical description of the amendment in the nature of a substitute. I'd ask that members hold their questions until after his presentation. Mr. Barthold, welcome.
Thank you, Mr. Chairman, Mr. Levin. The members have before them JCX 30, which is a description of the underlying legislation, and then, as the chairman noted, the green sheet, which notes the modest changes made as part of the chairman's amendment in the nature of a substitute. I'll offer a very brief summary of the major facets of H.R. 9 as amended by the chairman's amendment. The general rule provided in H.R. 9 is that for tax year 2012, a qualifying small business may claim a deduction equal to 20% of qualified domestic income, but not more than 50% of wages or not more than total taxable income of the taxpayer. A qualifying small business for this purpose is a business that had fewer than 500 employees in either calendar year 2010 or calendar year 2011. Qualifying domestic income is defined as domestic gross receipts less those costs of goods sold allocable to the domestic gross receipts, less certain other expenses such as research expenses, overhead expenses, and interest expense. The wage limitation that I mentioned has two parts. It's generally 50% of the greater of non-owner employee wages or 50% of the sum of wages of non-owner family members of direct owners plus wages of owners who are less than or equal to 10% owners. In the case of businesses that organize themselves as a partnership, the legislation provides that the distributive shares of certain partners who are less than or equal to 10% owners would be deemed as wages for the purpose of this wage limitation. A couple of other significant points to note in the legislation is that the deduction is also provided against the alternative minimum tax. There's coordination between this deduction and the deduction for domestic production activities provided under Section 199, such that there's no double benefit for the same income. The overall effect of the 20% reduction is to reduce the effective rate of tax of the taxpayer. For example, the benefit of the 20% deduction for an S corporation owner in the top individual income tax bracket of 35% would be to reduce that effective marginal tax rate by 7 percentage points from 35 to 28%. Likewise, if the owner were in the 25% bracket, the effective rate reduction would be 5 points from 25% to 20%. That concludes my brief summary. Happy to answer any questions that the members might have.
Thank you. Are there any questions for Mr. Barthold? Mr. Levin.
Mr. Barthold, is there in this bill any limitation on the types of businesses that could receive the deduction?
Mr. Levin, no, sir. It's available to any qualifying business. The limitations are solely based on employment and qualifying income.
So,
Well, also the wage limitation,
right.
but but not on business type.
So you can't think of any type of business that would not qualify?
It's available to entities that are formed as C corporations, S corporations, LLCs under state laws, partnerships, sole proprietors, farming proprietorship enterprises.
Whatever they're doing?
Whatever their line of business, yes, sir.
Does the Joint Tax Committee prepare distribution tables?
Distribution of what we have done some work in terms of how some of the benefits of the provision would fall across different entities. Is that what you have in mind, Mr. Levin?
Different income levels, for example?
At this time, I have not. We can, if the members would like that. I'll tell you, there is we have sort of a technical data problem. One thing that we have spoken about to the committee in the past is, as you're aware, while we have a lot of data at the enterprise level, it's not all automatically linked to individuals, which is how we typically present distribution of income information to the members. So, for example, we don't have all data of any given S corp, for example, linked to all the individual owners. At the present time, we're actually have a project going with my quantitative economics colleagues where we're trying to do some of that linking, and if we're successful, maybe in a couple weeks, it could produce a distribution of the benefits against individual incomes, as you're suggesting.
Did anybody so far ask you for a distribution table on this bill?
Well, Mr. Levin, you know that we treat all requests from different members as confidential, so it wouldn't be appropriate for me to say whether members had or had not. But if the committee, and if you in particular are interested, we'll try and push forward the work that I just described.
Okay, well, so requested.
Yeah, as we'll
I
try.
mean,
If
I don't expect you to give the names of people who've requested, but can't you say whether there's been so far any requests?
Well, I usually don't do that. It's just to be fair to members.
We appreciate your fairness.
I'll yield back.
All right. Anyone on this side? Right. I think almost every Democrat's asked time for that. I think I'll just go down the line if that's all right. Mr. Stark?
Thank you, Mr. Chairman. Thank you, Mr. Barthold. The change from prior versions of this proposal, in the changes, this bill contains a special provision that allows partnerships to treat income allocated to less than 10% partners as W-2 wages. Is that correct?
That's correct, Mr. Stark.
Now, on the assumption that virtually all professional service firms, such as law firms, consulting firms, lobbying firms, accounting firms, are formed as partnerships, it's conceivable that allowing partnerships to benefit from this bill, we're really giving a big tax advantage to lawyers, lobbyists, accountants, and hedge fund managers by raising the limitation on their deductions. Is that not so?
Well, the way H.R. 9 works is it provides a deduction for income subject to this wage limitation. So, as you've described it, partners who are less than 10% partners could qualify on their income as if it were wages, and that would permit the business to claim this deduction and report it to the partners.
Thank you.
All right, Mr. McDermott. All right, Mr. McDermott.
Thank you, Mr. Chairman. Mr. Bartold, have you produced any macroeconomic analysis of this proposal at all?
At this point, Mr. McDermott, we haven't, but as you know, under the House rules, if the committee favorably reports the bill to the House, we're charged with undertaking a macroeconomic analysis. Now, pending any amendments that the committee might undertake, my colleagues are sort of geared up to undertake that analysis, but we haven't really started anything at this point. Again, pending whatever amendments the members might want to make.
Tell me in general, I mean, this is a $46 billion giveaway that is supposed to produce jobs. And I'd like to know in general what you think the macroeconomic effects of that tax are if they're not paid for.
Well, if you'll permit me to speak very generally without prejudging the underlying work that my colleagues are going to will undertake over the next few days as charged by the House rule. The committee discussed back in September economic modeling, and we spent some time in committee talking about some of the macroeconomic modeling. So let me just point out two or three factors that are relevant. We look at incentive effects in terms of changes in marginal tax rates, so after-tax rates of return, both short run and long run. We look at cash flow effects, and then we look at how the tax cut is or is not financed. So one aspect that would be a positive is there is a reduction, a net reduction in taxes that increases cash flow of the qualifying taxpayers. That can increase aggregate demand in macroeconomic models. On the other hand, as you noted, the reduction is not paid for in the budget sense. So depending upon the actions of the Federal Reserve, you could see over the longer run an increase in interest rates, which could lead to some crowding out of investment. So you might see some benefit in the short run, less benefit in the long run. Those are some of the features that our models will take into account.
Let me ask you a more pointed question. It's my understanding the CBO uses the concept of a multiplier effect, and that the multiplier is 2 if you're, in terms of each dollar, you create another $2 if you're investing in infrastructure, but that when you just give these kind of loose throwing money out there, they don't say it's ever more than 0.5 of 1%. Is that true?
I'd actually have to go back and look at some of the recent revised work of the Congressional Budget Office. They have estimated multipliers, and let me note that the multiplier concept that they use is a little bit of a truncated macroeconomic analysis, in that it's maybe only looking at very short run effects and not the longer run effects, so it's not really a complete macroeconomic analysis, but they do They have reported differences from different possible policies depending upon the delivery, but I can't right now verify exactly
But nobody,
the point that you made.
what you're saying is, no one came to you and said, give us the best tax reduction that will produce the most jobs.
Well,
That wasn't asked, you weren't asked to construct that.
well, Mr. McDermott, we work with the members to help them try and make their policy choices as effective as possible and technically correct as possible.
Do you think it's technically better to just throw the money out there than to direct it at projects?
No, I was saying that that I hope that my colleagues and I have been successful in working with Chairman Camp on his amendment, the nature of the substitute, to have the legislation be technically, legally correct to help meet the policy goals that that are outlined in
So
H.
you don't care about the policy goals, you just want the technical stuff as to how it fits into the code. That's where you really emphasize your work.
Well, that's what I mean. The members set the policy, and so we try and help the members achieve their policy goals.
All right, thank you. Time's expired. Mr. Brady's recognized.
Thank you, Mr. Chairman. I want to inquire for a moment about what the benefits will be and who will realize them among our small businesses in America. I know today, 23 million Americans can't find even a full-time job. I know a number of our small businesses continue to struggle. So I have a series of questions. I know Joint Tax has looked into the impact, a series of questions about the businesses that will benefit from this deduction. Mr. Bartold, how many C corporations, small businesses, do you estimate will benefit from this deduction, and roughly what's the average benefit?
Well, as I had noted to Mr. Levin, we have done some preliminary work looking at by entity type who could benefit, and we've sort of estimated a little over 500,000 C corporations will be able to benefit from the proposed legislation with an average deduction of approximately $21,000 per firm.
How many S corporations, small businesses will
S corporations typically, as the members are aware, will be smaller, so are more often under the employment threshold, and so we've estimated about 2.7 million S corporations would benefit, and that their average benefit would be approximately $25,000 per entity.
Right. How many partnership small businesses, what will they see for benefits and deductions?
Partnerships, as we have them recorded in our data, approximately 700,000 partnerships, with again a little over $31,000 in terms of average deduction.
Sole proprietorships make up a large part of our small business community. The number that would receive benefits under that?
Nearly 18 million sole proprietorships, sir.
That's the largest.
The sole proprietorships, as the committee knows from some of the data we presented in the hearing on entity choice, the number of sole proprietorships swamps all other business forms in the United States.
And those are prevalent through every state and virtually through every community in America.
That's correct, sir.
Now, how many farms would that
A
benefit?
little over 500,000 farming proprietorships.
So my numbers show more than 22 million small businesses will get help
That's
through
correct, sir.
this. Great. Thank you, Mr. Chairman. Appreciate it. Yield back.
Thank you. Mr. Lewis is recognized.
Thank you, Mr. Chairman. Mr. Barthold, I have one question. A great number of small businesses in my district are run by sole proprietors with no employees, not a single employee. They contribute to the economy and serve people all across Metro Atlanta. Will these small businesses receive a tax deduction under this bill?
Mr. Lewis, that's actually can be a complicated question depending upon the sole proprietorship. As you described your specific facts in sort of a static basis, the answer is no. If it's a sole proprietor, no employee and I also add no potential to pay any wages to someone other than themselves. The only reason I qualify that is part of our analysis of the bill is based on the prospect of a sole proprietor often may have another family member engaged in the business, and it would be possible for that person under the bill to be paid wages for 2012 and thus claim benefit up to the amount of wages claimed. But if it's just single individual, nobody else, and doesn't have the opportunity that I just described as the owner, there would be no benefit.
Well, I must say that I'm at a loss as how this can be a small business bill if a business with 500 employees get a tax cut, but a real mom and pop get nothing. Not 1 cent, not 1 dime.
Well, again, if it were mom and pop, then mom could pay pop some wages if mom were the sole proprietor. And
Well, in this case,
that's why I said it really.
Thank you for that brilliant technical analysis, Mr. Barfoot.
but if mom is not paying pop anything, what happened? Or pop is not paying mom anything.
If they did not, then as you described it, it would be correct. The owner cannot claim a wage on themselves, and so would not be eligible. The only point I was making in mom and pop is, presently the income is just taxed sole proprietors. As you were sort of describing it, sounds like they'd be filing a joint return. So the total income of the sole proprietorship would be taxed on the return. If one of them recharacterized some of the income as wage to the other of them, the same amount of income would still be taxed on the individual return, but the sole proprietorship would be able to claim some benefit under H9.
What happened if you're a lawyer, a doctor?
As a sole proprietor, the same thing, the same rule would apply. I mean, the point that you have made, that if it's just the single individual, nobody else, and no opportunity within that sole proprietorship to pay some wages to someone else, then there would be no benefit under H.R. 9.
Well, thank you, sir.
And I do just want to thank you, Mr. I do want to say that, as you, in response to Mr. Brady, pointed out, that there are nearly 18 million sole proprietorships under your analysis that would qualify for this benefit. By far and away, the largest business entity type that would qualify. Is that correct?
No, that's correct,
All right.
Mr. Camp.
All right. Mr. Teaberry is recognized.
Thank you, Mr. Chairman. Just to follow up, Mr. Bartold, I have a lot of family-owned small businesses in my district as well, mom and pops. And it strikes me under the tax code that if a mom and pop business today is set up where they have joint interest in the business, they might be prevented from getting the deduction under the way I read the bill. Is there something in the bill, any special rules that would allow a mom and pop business that has equal stock in the business, for instance, to take advantage of the deduction?
It'll depend, Mr. Teaberry, it'll depend a lot on the structure of the business.
If there's partnership
Well,
between them.
I was getting there. If I can just
Okay.
take 15 more seconds. The one point that I made in the description was, if you had partners who were less than or equal to 10% partners, then their wages can be deemed as wages for purpose of the wage limitation. But if we had two people who were equal partners and then there's no wages paid, then they would not be eligible under the bill as laid out.
So if you had a mom and pop restaurant, so the mother and the father own a restaurant, they have children that are working for them in the restaurant, how would that work?
Well, let me make a couple assumptions about the restaurant. The children.
The name
they
is
can pay
Monte Carlo.
They can pay the
and-
children. They can pay the children wages, and then it works as I was describing earlier.
How would they not pay the children wages? Wouldn't that be in violation of the?
Well, I'm not
labor laws?
exactly sure how what level of wages are. But yes, they should be paid. If the children are working, they should be paying the children wages.
Okay.
Hey, so assuming they're paying the children wages, then they may claim a 20% deduction on the qualifying domestic income limited by wages, by 50% of the wages paid, as I described. So they would be eligible depending upon the amount of wages. If the restaurant involves also non-family member wages, those also count.
And it would apply to whether it was a manufacturer who had 5 people, a mom and pop again.
It doesn't matter by type of business, be it service, be it manufacturing, be it wholesaling, retailing, anything of that sort, sir.
And so the rules in the underlying bill would provide for that ability.
Yes.
Okay.
Yes.
Thank you. Are you back, Mr. Sherman?
Thank you. Mr. Neal's recognized.
Thank you, Mr. Chairman. Mr. Barthold, could you provide the committee with a definition of tax expenditure as defined by JCT?
Well, Mr. Neal, the concept tax expenditure is actually defined in the Budget Act of 1974, and that's what we try to apply in our annual tax expenditure analysis. And that's essentially relative to a sort of theoretically normal income tax. Any special exclusion, deduction, or rate would create a tax expenditure.
By that definition, would you suggest that the Cantor small business proposal, if it were to become law, would be a tax expenditure?
As a special deduction, we would add it to our list of tax expenditures. As I think the committee knows, Section 199 we list as a tax expenditure presently.
Thank you. Mr. Chairman, we're missing an opportunity here to deal with the issue of complexity. And I ask this question because it's ironic that on the same day that we're debating the Republican budget, which calls for lowering both the corporate and individual rate to 25% by eliminating tax expenditures, or as our Republican friends use the language, closing loopholes, we're being asked here to add a new tax expenditure to the code. I think our time would be better spent tackling some of the expiring provisions that we must pass this year, including the 2012 AMT patch, rather than adding complexity to the code. And you'll see my amendment shortly on this AMT patch. On the topic of extenders, in addition to creating a new tax expenditures, the Republicans are creating a new tax extender with the Cantor bill. I think it's critical that we extend important provisions that expired last year and tackle the provisions that expire at the end of this year before creating a new tax extender. Important principles of tax policy are certainty and predictability. These principles are necessary to ensure that taxpayers have confidence in and can rely on the policies that have long been part of our code, while at the same time improving compliance with law. So it frustrates me to no end this morning that we in Congress, time and time again, allow important provisions to expire only to extend them retroactively. Many of the tax provisions that expired in 2011 are priorities of mine. For example, the New Markets Tax Credit. New Markets is designed to stimulate investment and economic growth in low-income communities that have traditionally been overlooked by conventional capital markets. We've seen the results in all of our districts, and in Western Massachusetts, it's pronounced. Stories like Riverview Market, Northampton, and the Colonial Theater in Pittsfield are but two. Another important provision that expired last year is the 15-year depreciation schedule for leasehold improvements, restaurant improvements, new construction of retail improvements. The extension of this petition is particularly important for small businesses like Dave's Soda and Pet Food City in my district. He is not normally given to our political positions on the Democratic side, but is quite frustrated by the pace, I should say the lack of pace, in updating the expenditure argument. If not for this provision, Dave would have to write off improvements over 39 years, which is quite costly. And I'd be remiss if I didn't highlight the R&D credit. It's a huge priority for many businesses in Massachusetts. In fact, Massachusetts is ranked third in the country in terms of the number of companies in the state reporting R&D activity. This credit has had profound results. The R&D credit is estimated to have increased annual private research spending by $10 billion in the short term and $22 billion in the long term. I call this up today, Mr. Chairman, to point out that many of the issues that we should be tackling in a timely manner are being cast aside as we implement policy that has been determined by the leadership of the Republican Party rather than through the vetting process that this committee is noted through history to have accomplished. So I hope the opportunity will avail itself once again. I was pleased that the chairman and Pat Tiberi last week asked for a process that will begin reviewing tax expenditures. I would note some irony that we're beginning to review tax extenders. This is an important consideration, and I hope that we will proceed to get this accomplished. Also, this unbiased review by tax experts of every expiring provision would be very helpful as we evaluate the effectiveness of each extender. Mr. Barthel, lastly, how many tax provisions expired in 2011 and how many expire at the end of this year? And can you comment on any of the problems with enacting legislation that goes into effect retroactively?
I'll have to respond to you after the markup with the exact count of the number of expiring provisions. I'll provide that to all the members in response to your question. Of course, there are administrative problems for the Internal Revenue Service and for taxpayers when provisions are enacted retroactively. Sometimes it can involve problems in record keeping or documentation. On the economic side, there's not generally an incentive effect to providing for changing tax treatment on something that's already happened.
Using the example of mom paying pop more that you've established precedent with, would you be willing to suggest there are a lot of provisions that have expired or a few that have expired?
A fair number, a good number of provisions expired at the end of 2011, and I'll give you a count. As you know, annually we've produced for members just a list of what's expiring when, and we did produce that document in January of this year, and I'll go back and I'll send a count around.
Thank you, Mr. Chairman.
Yeah, and if I might say, I'd like to work on a common definition of what expiring provision is, because some use a rather expansive view of that and come up with several hundred, and others use a more narrow view and come up with more like 60. So there's a number of them. One of the reasons we do want to begin this review, as you point out, is because some of these have been routinely extended time and time again, and we do want to make sure we understand how effective they are, particularly as we try to move toward comprehensive tax reform. So I look forward to working with the gentleman from Massachusetts on that and trying to find a way to address these. And I think, obviously, at the end of 2010, when we saw up close again how difficult it was when so many of them expire and then are retroactively put back in place, we'd like to try to find a way to get on a more predictable path with these. So I appreciate that.
Thank you, Mr. Chairman.
Mr. Becerra is recognized.
Thank you, Mr. Chairman. Mr. Balto, thank you very much for your expertise. Can you tell me, having read the legislation, my understanding is it will cost $46 billion?
Mr. Becerra, that's the estimate that our staff has prepared. Yes, sir.
And in reading the bill, did you find anywhere in the bill where there is an offset to pay for the cost of that $46 billion hit to the Treasury, which, as we know, is in deficit?
H.R. 9 provides a tax benefit. There are no tax increases in the bill.
So there's no offset to the cost, the $46 billion cost?
No, sir.
So unless there is an offset provided, this will add to the deficit $46 billion?
As we estimated, sir, yes.
Okay. It's called the Small Business Tax Cut Act of 2012. Is there something in the legislation other than the 500 employee limit with some of the income limits that otherwise would define a small business?
The H.R. 9 defines small business solely by the number of employees in either 2010 or 2011. If it's a new business, you can use the employee count in 2012.
So let me ask you this. Last night,
I guess I should also add there's some common ownership tests.
Correct.
So that if someone were to try and say, oh, I'm organized and I actually have 4 different C corporations and they each had 200 employees, if I controlled all 4 of those, I'd be 800 employees. None of those enterprises would qualify, sir.
let me ask you this. Last night there was breaking news that in my town of Los Angeles, our baseball franchise, the Los Angeles Dodgers, just sold for $2 billion. They obviously have a pretty high payroll for some of their employees. If they happen to have fewer than 500 employees, would they qualify for this small business tax cut?
Again, as has been noted, there's no prohibition by type of enterprise or business. So if the Dodger organization under whatever, under the common control test I just noted, if they number fewer than 500 employees, the Dodgers would qualify, sir.
So is that a yes, that if the Dodgers have fewer than 500 employees, yes, they would qualify for
Yes, 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 they
Okay.
would, sir.
Would other sports franchises that pay their employees millions of dollars also qualify for the small business tax cut?
Hey, again, there's no prohibition against enterprises engaged in sports.
Okay, so they could qualify as well. My understanding is that the Trump Organization is a business that has about 300 employees. If it has 300 employees, does the Trump Organization qualify for a small business tax cut?
If again, we might look at a common control test if we're referring
Correct.
to Donald Trump, since he's engaged in a number of different things.
But let's say they pass that common
If,
control
as you
test.
have stipulated, if there were 300 employees, then yes, it would meet the definition and qualify to take the deduction up to 50% of wages paid or taxable income.
So the Donald Trump Organization, if it has fewer than 500 employees, would qualify for some of that $46 billion tax cut. My understanding is that Larry Flint Productions has about 117 employees. So if they meet that qualifying test and have 117 employees, would they also qualify for that small business tax cut?
Again, any entity, choice, C Corp, S Corp, partnership.
Mr. Baltroll, I know we could go through the
they're all
exercise
good.
if you could explain, but I'm just trying to find out if I've given that
simple
limitation,
answer
is it a yes?
Yeah, they're less than 500.
So Paris Hilton Entertainment, which has 5 employees and is based in Beverly Hills, again, if they meet that criteria, they qualify for that small business tax cut?
Yes, they would, sir.
Okay. Now, another question. The legislation, you've read it, does it limit any benefits to the tax cut if solely to those businesses that create jobs? Is there a requirement that you create a job?
There's no requirement on the result of the tax relief.
So you don't have to create a job to get the 20% tax cut?
That's correct, sir.
Now, let me ask you this. What if you fire an employee? Can you still get that tax cut?
The tax cut, your qualifying business, the simple answer is yes, because
Okay,
you're
so if
qualifying
that's the answer, let me
business
ask you
based
this.
on
What if a
prior.
company fires an employee in the United States and lays off an American worker and then hires people abroad by outsourcing that job? Could that company still qualify for that tax cut?
They could still qualify, but remember, there would be an effect on the wage limitation.
All right.
Thank you very much.
Time's expired. Mr. Johnson's recognized.
Thank you, Mr. Chairman. I used to have a company. I built houses in Dallas, and my wife was a partner, and I didn't have to divide her up. She took lots of money anyway. But if a business qualifies as a small business, and they only measure the employees in 2010, 2011, how do you determine if they have less than 500 employees in the following years?
Wasn't trying to count the number of employees in 2012, so the legislation says that you're a qualifying business if you had
Okay,
fewer than
but
500.
going forward, how do we apply this legislation?
I'm not quite clear on
Well, the legislation ends at the end of the year, I think.
Oh, no, that's correct. I mean, it's 1 year
Okay.
provision. I'm sorry.
So what that means is if a business has been hovering near 500 employee for the past several years, but might be over 500 now, in 2012, it has the opportunity to qualify, one on the number of employees in 2010 and another on the employees in 2011. Is that true?
It would qualify in 2012 based on its employee count in either 2010 or 2011.
So they can pick whichever year they want.
They can pick the better one. Yes, sir.
Some of the anti-abuse provisions in the bill, let's talk about them. Say the business with far more than 500 employees tries to divide its existing company into two new companies, each of which are under that 500 employee threshold, in an effort to have each of those two new companies qualify. Is there anything in the bill that would prevent a business with, say, 600 employees from dividing its business into two companies with 300 employees and claiming the companies are new for purposes of the deduction?
The example that you raised, Mr. Johnson's similar to the point I was making with Mr. Becerra, and there's common control tests. So both by the common control test and there's anti-abuse regulatory authority provided to the Treasury, the situation you described should not qualify under the legislation.
Well, similarly, are there any special rules that apply to predecessor or successor companies? In other words, could a business form a new company in order to try to claim the deduction?
The anti-abuse rules in the legislation would make that an inappropriate result.
Thank you, sir. Thank you, Mr. Chairman.
Thank you. Mr. Thompson's recognized.
Thank you, Mr. Chairman. Is there a magic to the 20% provision? Is that based on some economic principle that if we provide a 20% cut, it's going to generate new jobs? Or is that an arbitrary number?
I'm honestly not sure why 20% was chosen. I mean, as I noted in my summary, it has the effect of lowering effective marginal tax rates.
Right. But so there's no specific reason that you know of from an economic or an academic perspective as to why it was 20?
Don't have anything I can offer.
Would an employer
I think it was a policy decision.
No, I know, but I mean,
would an employer be required to hire new employees or to grow his or her business in order to qualify for this?
No, again, the qualification is based on your size in 2010 or 2011. And and then the benefit is reduced effective rate of tax on income earned in 2012.
So a company could have actually fired people or laid people off and still qualify for this?
That was the point that Mr. Becerra made, that's possible, but if you fire or lay people off, it does have an effect on the wage limitation, which affects the potential benefit that you may be able to claim.
And could you tell us again the cost of this bill?
It's provided on JCX 31. We estimated it to have a $45.95 billion revenue cost.
$45.95 billion. And did I hear you correctly? There is no pay for in this bill? It's not, I think you said there was no tax.
The legislation, H.R. 9 before you, has no provision that increases taxes.
Does it have any provision that reduces expenditures, cuts services?
It's entirely a tax code provision, so no, sir.
So it's unpaid for, it would grow the deficit by $46 billion.
Yes, sir.
I have no further questions. I yield back.
Right. Is Mr. Larson's recognized?
I thank Chairman Camp and for this opportunity and hearing, and I have to say these are this bill requires a very complex analysis, and as gifted as Mr. Bartold is, we're having difficulty finding where the real job creation comes in all of this. But as part of your analysis, do you look at the effect on existing record-keeping requirements and the activities of taxpayers and the complexity of those calculations and likely behavioral responses? I would like to talk about the tax-motivated behavioral responses for a moment, the kind of thing that causes economic distortions and waste resources in tax planning. And wonder if you would comment, for example, could this proposal create an incentive for some well-advised S corporation owners to shift earnings out of wages and into profits? And if so, could it require partnerships to make a complex determination about whether to treat income allocable to less than 10% of partners as W-2 income? And are these complex calculations the kind of things, at least that, as I look at it, that taxpayers will do on their own, or will they need to pay lawyers and accountants to do these calculations? And maybe therein is the job provisions that I've been looking for.
Mr. Larson, you had several questions. I'll try and deal with them. You had a general question about whether we've looked at record-keeping, possible record-keeping requirements and like. I'll note that, again, as part of the report that we would help the committee staff prepare, there's a required complexity analysis, which we talk with the Treasury, we talk with the IRS about whether this increases potential complexity. That would be part of the committee report that we would prepare. So that's something that we will be investigating. You asked if we assumed that there would be behavior. I've noted at a couple different points that yes, we thought that this would create some incentives to recharacterize income, not in the direction that you had noted of in the case of an S corporation of from wage into income, but since wage is a limit on the amount of benefit, we'd actually expect that that someone might pay more wages. As you know, there are some issues that the IRS has had through time in working with S corporations as to whether owners are underpaying themselves or certain family member employees. So there actually might be an incentive to pay a more close to market wage in order to increase the wage limitation that I noted as part of the legislation. You asked about the deemed wage as part of the less than 10% or partner. You seem to suggest that that there might be an elective potential to that. For the purpose of measuring the wage limitation, I don't think that the legislation anticipates that an election would be made by the partners. It would either be applied to less than 10% partners or not.
I know it's not possible for you to, perhaps not, to hypothesize about those various choices in the complexity of this law, proposed law, that people would need to hire additional lawyers or accountants. But my colleague from California was going down a similar path, and I would yield to him because I know he wanted a follow-up question.
Thank you, Mr. Larson. Quick question for you, because it seems like it's a total wide open season for anybody who wants to claim a tax cut. Let me ask you this. Health providers, attorneys get the tax cut.
Yes, sir.
So if I'm a healthcare provider that offers abortion services, I can deduct 20% of the cost of providing all my different healthcare services, including abortions.
There is Under H.R. 9, there is no prohibited business type.
So if I'm a health provider and I provide abortions, I get to deduct 20% of the cost of my, the expenses of my enterprise.
Under H.R. 9, that's correct, sir.
Thank you.
I think the gentleman's point's been made. This tax cut applies to any legal business with less than 500 employees, just as if you were to reduce the corporate or individual rate, that would also apply to any legal business. Mr. Blumenauer is recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Barthel, I deeply appreciate your patience as we go through this ritual, occasionally with things that are within your area of expertise. But it's important to raise this. And Mr. Chairman, I'm not going to take the full 5 minutes, but I would note, Mr. Barthel, you're talking about the complexity inherent in this. You've helped to weave what qualifies, what doesn't. You've talked about some of the distinctions. There will be some work with the IRS to try and clarify so that that there aren't hopefully unintended consequences, that there's a certain level of complexity inherent in even straightforward things like this that are going to have to be attended to.
The taxpayer, as I'd noted, has to start from their gross receipts and allocate certain expenses. In a lot of cases, that will actually be fairly simple, but it is limited to domestic gross receipts. So if a taxpayer is engaged in business both here and abroad, it makes for potentially more complicated bookkeeping. That's true, sir.
And I would just note, we'll be debating on the floor today a budget bill from my Republican friends that will be reducing some $10 trillion of revenues to the federal government, both in terms of the extenders and new provisions that they would put in, which will be solved by reducing loopholes and complexity in the tax code. And here we're going to be borrowing $46 billion, adding more complexity at precisely the time we're dealing with a slight $10 trillion problem on the floor in the name of reducing complexity. I find a certain irony in terms of the disconnect between what we're doing here on the Ways and Means Committee and what we're doing on the floor with the budget, but I'll yield back. Oh, I yield to my friend from California, Mr. Becerra.
Thank you, Mr. Blumenauer. I just want to make sure I'm understanding this correctly. Let me give you another example, Mr. Bartold. Bernie Madoff. Bernie Madoff ripped off a whole bunch of people of their money. He's now in jail. He's defending himself in court, his business in court against those investors who were suing him. Bernie Madoff's business would have qualified for this 20% tax cut, right?
Financial businesses qualify. All businesses qualify.
So his business would have qualified. The attorney that's defending him in civil court against all those ripped off investors will get to write off 20% of his expenses by using this tax cut, right?
If his firm has fewer than 500 employees, sir.
His accountant who helped him perpetrate this fraud against investors, so long as that accountant has fewer than 500 employees, can also take advantage of this tax cut.
Accounting is, again, under 500 employees if the firm is under 500 employees.
Now, my understanding is that under Section 280E, there is a limitation from anyone who engages in the sale of illicit drugs from being able to take advantage of this tax cut. Is that accurate?
Section 283 is a specific section that says that no deduction or credit is allowed for a taxpayer engaged in the trade or business which consists of trafficking in controlled substances, and it's specific to controlled substances.
So controlled substances, drugs, illegal drugs.
Yes.
Okay. So if you're trafficking Tom, in illegal drugs, you will not be able to take advantage of this tax cut, right?
Yeah.
I would just say that we're asking for a legal conclusion from Mr. Bartold. And I would say that with regard to the Madoff enterprises, there's a real question whether that's a legal activity.
Mr. Chairman,
and so
Mr. Chairman, I will try to limit myself then to limit legal activities.
I would just want to say that you know,
If I could
Mr.
just-
Barthold,
Mr. Chairman,
it
is
would
this,
not
is this
make-
being used against my time?
I would ask the gentleman to suspend.
Okay.
And I would say to Mr. Barthold, I would ask you not to draw legal conclusions with regard to particular activities. And I think your answer is when you say accounting is a qualified activity. But in response to the Madoff activities, I really think you have to think about whether that is a legal activity. So
Mr.
the
Chairman,
gentleman's
that's-
time, you have about 30 more seconds.
But the accounting is a legal activity.
Accounting is
And he didn't
as a
deal-
business, but when you couch it in the term of the Madoff activities, I think there's a real question whether those activities would be viewed as legal under the statute. It's a legal conclusion that I don't believe Mr. Barthold is qualified to make. He is here for technical advice.
Yeah, and Mr. Chairman,
You
that's...
have 30 seconds.
Yeah, Mr. Chairman, that's a good clarification because I think what I'm asking is if the investment activities that Mr. Madoff and others do for investors across the country would be would qualify for this 20% tax deduction, and as Mr. Bartol said, they would. Now, illegal drugs will not qualify. Money made off of illegal drugs won't qualify. What if someone traffics in sex? Is that prohibited?
Well, again, Mr. Becerra, not commenting on how it might apply to illegal activities. I was pointing out with respect to Section 280E that there's a specific prohibition against deductions related to trafficking in controlled substances.
But there's nothing that prohibits the trafficking in sex.
Mr. Reichert's recognized.
Thank you, Mr. Chairman.
The sheriff is recognized.
Yes, I was going to comment on the last question. I don't know too many people involved in the drug trafficking trade or human trafficking trade that actually submit income tax forms.
Yeah.
So,
this may encourage him to do so.
well, I would disagree with that. So I just have a couple of quick observations, Mr. Barthold, and then a quick question. So our effort here today has been kind of called into question. The question really is, and the effort really is, for us to provide some energy behind our small businesses. And what we know today in our economic world is that we're 8.5% or so, right around that number of unemployed people across this country. And as I talk to folks back in my district, what I hear is that, and I think we sometimes forget this back here in Washington, D.C., that we're not the only taxing agency that is applying this burden, tax burden, on our small businesses. So as they try to conduct their businesses day to day, they're taxed by the cities they operate in, they're taxed by the counties, and they're taxed by the state. In fact, some cases around this country, some small businesses are paying 40% or more in taxes to governmental agencies. So our effort is to create some energy, as I said earlier, for these businesses to hire additional employees. As we all know on this committee and in this Congress, that over 80% of the people employed in this nation are employed by small businesses. That's why this effort is directed at small businesses. And when you are able to return some profits to small businesses, to me, that equals a possible reinvestment of those of that capital, of that revenue, back into the business, or in the hiring of additional employees, which, of course, would eventually help this economy. I think most of us in this room would agree. But I want to specifically focus on one particular section of this legislation, and that's Section 199, the domestic production activities deduction. So currently, businesses that engage in domestic manufacturing are eligible for the Section 199 deduction. The question is, how would these two provisions interact? Would this bill provide them with a double benefit?
Sorry. No, sir. As I noted in the summary, there's explicit coordination with Section 199. There's no double dipping.
Would they have the opportunity then to choose? Is that the way it would work between the two?
Yes, they'd choose which would be better for their business situation.
Okay. Thank you, Mr. Barthold, and I yield back.
Thank you. Mr. Kynes recognized.
Thank you, Mr. Chairman, and thank you, Mr. Barthold, for your patience and your analysis here today.
Mr. Bartle, just so I am clear, there's no requirement for any business to create any job in order to qualify for this tax break under the legislation before us. Is that right?
That's correct. Qualifying business based on number of employees from 2010 or 2011.
And therefore, the reverse must be true then, too. If they happen to lay people off or fire people, they could still qualify for this tax break under this legislation?
As I've noted, they qualify. Layoffs do have the effect of lowering the wage limitation.
And what's the duration of this tax break?
The provision applies for the taxable year of the taxpayer 2012.
For the next, so just for this next year, and then it's due to expire again.
Year.
Now, Mr. Bartle, if you're a business large and small, and you see a tax break and temporary in nature, are they more or less likely to make longer-term investment decisions if they see a temporary tax break as opposed to something more permanent?
Well, it's actually a little bit of a complicated question, as I noted in brief outline of some of the macroeconomic factors. Improved cash flow can be a factor that helps people make long-run investment decisions.
I'm just asking you about the temporary nature of this
temporary
and the effect of those decisions.
A permanently lower tax rate provides a longer after-tax return, so would make it more likely that that you'd undertake long-run investments.
And I would assume too that if a business views a tax provision as temporary versus permanent, that is going to have an influence on their hiring decisions as well.
Well, again, I wouldn't diminish the potential positive effects of temporary increases in cash flow in terms of business planning.
Okay, has there been a comprehensive analysis of the potential for job creation under this legislation yet?
Well, as I noted a little bit earlier, if the committee votes to report favorably the bill, we will, under the House rules, undertake a macroeconomic analysis.
That hasn't been done yet, is that right?
We have not done that yet, sir.
So has there been any distributional analysis of who will benefit under this tax break?
I explained a little earlier to Mr. Levin that the short answer is no, but we are doing some work to match some data, and Mr. Levin
but it hasn't been done yet.
Interest in having that, and I'll try to provide that to Mr. Levin.
There's been an overall macroeconomic analysis of the effect of this tax break.
Again, the macroeconomic analysis we will include as part of the committee report as required.
Not
sir.
yet. What about the complexity of the implementation of this law? Has there been an overall analysis of that?
Again, complexity analysis we will hope to provide, we will provide as part of the requirements under the House rules as part of the committee report.
Mr. Bartho, has there been a subcommittee hearing on this legislation, the $46 billion tax break before us today?
I don't think there's been a specific hearing on H.R. 9.
Has there been a full committee hearing on this legislation today?
The committee has had some hearings on tax issues related to different entities.
But not on the specific provision of this legislation before us.
We often don't have a hearing on a specific bill. We usually have a hearing on a subject area, and we have had hearings.
Mr. Chairman, this is a
small business tax
$46 billion bill, and no subcommittee or even full committee consideration for it. No witnesses coming before us to see what impact it's going to have. And we also know, according to Mr. Barthold's testimony, it's a $46 billion budgetary cost that is not paid for. Is that right?
This particular bill has come up in hearings, yes.
Well, I don't recall this specific bill, the 20% across-the-board tax break for employers of 500 or fewer being the subject of any hearing. Mr. Bartle, you've been here for a while now, and you've been here at the end of 2010 when there was the extension of those expiring tax provisions. That was for a 2-year period, is that right?
In 2010, the Congress chose 2 years for some and some different periods for others, and let some provisions expire.
Do you recall what the budgetary cost of that extension for 2 years was?
Not off the top of my head.
I think it was closer to about $1 trillion. Do you know if that was paid for, offset through revenue increases or spending reductions in the budget to pay for that extension?
The particular piece of legislation I do not believe carried a specific offset. I don't remember the rest of the end of the year.
And most recently, there was enacted another temporary extension of the payroll tax cut this year. Do you recall what the cost of that extension of the payroll tax relief this year?
That was, I think we were approximately, I'd have to look it up to give you the specifics. I think we were approximately $100 billion.
All right, thank you. Time's expired. Mr. Davis is recognized.
Thank you, Mr. Chairman. As somebody who ran a consulting company successfully for 12 years, and I find the commentary quite interesting. It's obvious, we had a saying on a financial services company that you could tell who ran a business and held a P&L by the kinds of questions they asked. And with that, I'd like to offer the apology of the committee to Mr. Bartold for the tone of some of these questions, because I believe that we've moved away from the fundamental focus on the creation of jobs. The gentleman's comments...
You cannot ask for pardon.
The gentleman from Kentucky has the time.
Thank you, Mr. Chairman. Perhaps the gentleman who was alluding that every business had some type of immoral, illegal quality to it reflects the types of businesses in his congressional district. I would say that the Democrats and Republicans...
Mr. Chairman,
I object.
I object.
The gentleman from Kentucky.
No, I have a right to
the
object.
time.
Point of
I
personal
object.
privilege, Mr. Chairman.
You want to withdraw your comment?
The gentleman will suspend.
Mr. Chairman, point of personal privilege.
I
The
object.
gentleman will suspend.
I would simply like to...
Mr. Chairman, point of personal privilege.
I would simply like to continue my commentary.
Point briefly.
I believe the gentleman was making reference to a member of Congress and made reference that that individual spoke of nothing but illicit activity in some of these businesses and made reference directly to his district. Could the gentleman please tell us who he's speaking about so we could then identify whether there should be a point of personal privilege?
I think that what I'm trying to say quite clearly to Mr. Bartold on behalf of myself is simply this, is that the attempt to create the straw man that all of the businesses
Chairman,
are
I'm
illegal
going to
and
insist on my
I
point
would
of
say
personal
that the
privilege.
gentleman's point of privilege is not in order, and the gentleman from Kentucky may continue.
Mr. Chairman, I will request a recorded vote on that.
I don't believe that's appropriate.
Mr. Chairman, I'm going to request a recorded vote, or I will challenge the chairman's ruling.
I'm not sure what the gentleman's requesting a recorded vote on.
I am challenging the chairman's ruling that this is that there's no personal privilege there.
Ask for a recorded vote on your refusal to allow...
And I believe I have a chance to speak on that point of personal privilege before we have a vote.
If you want to withdraw, you
Gentleman
can
from
withdraw.
Texas?
Mr. Chairman, motion to table.
All right. All those in favor of the motion to table, say aye.
Aye.
All those opposed, no.
No.
The ayes have it.
I ask
The
for a
motion is
recorded
tabled.
vote.
A recorded vote is ordered. The clerk will call the roll.
Mr. Herger? Aye. Mr. Herger, aye. Mr. Johnson?
I don't know if you can take down...
Mr. Brady? Aye. Mr. Brady, aye. Mr. Ryan?
You should just have
Mr.
a
Ryan,
withdraw.
aye. Mr. Nunez? Mr. T-Berry? Mr. T-Berry? Oh, okay. Mr. Davis? Mr. Davis, aye. Mr. Reichert? Mr. Reichert, aye. Mr. Bustani? Mr. Bustani, aye. Mr. Roscom? Mr. Gerlach? Mr. Gerlach, aye. Mr. Price? Mr. Price, aye. Mr. Buchanan? Mr. Buchanan, aye. Mr. Smith? Mr. Smith, aye. Mr. Schock? Mr. Schock, aye. Ms. Jenkins? Ms. Jenkins, aye. Mr. Paulson? Mr. Paulson, aye. Mr. Marchant? Mr. Berg? Mr. Berg, aye. Ms. Black? Ms. Black, aye. Mr. Reed? Mr. Reed, aye. Mr. Levin? Mr. Levin, no. Mr. Rangel? Mr. Stark? Mr. Stark, no. Mr. McDermott? Mr. McDermott, no. Mr. Lewis? Mr. Lewis, no. Mr. Neal? No. Mr. Neal, no. Mr. Becerra?
No.
Mr. Becerra, no. Mr. Doggett?
No.
Mr. Doggett, no. Mr. Thompson?
No.
Mr. Thompson, no. Mr. Larson?
No.
Mr. Larson, no. Mr. Blumenauer? Mr. Kind? Mr. Kind, no. Mr. Pascrell? Mr. Pascrell, no. Ms. Berkeley? Ms. Berkeley, no. Mr. Crowley? Mr. Crowley, no. Mr. Johnson? Mr. Johnson, aye.
Mr. Chairman?
Mr. Nunez? Mr. Nunez, aye. Mr. Roscom? Mr. Marchant? Mr. Rangel? Mr. Blumenauer?
No.
Mr. Blumenauer, no. Chairman Camp?
Aye.
Chairman Camp, aye.
The clerk will report the vote.
20 yeas, 14 nays.
The motion to table is agreed to. The
Mr.
gentleman
Chairman.
from Kentucky is
Mr.
recognized.
Chairman, I have a motion. Mr. Chairman, I move that the gentleman's words be struck.
Parliamentary inquiry, Mr. Chairman.
What's the parliamentary inquiry?
Mr. Chairman, isn't it true that when an individual desires to strike down words, they have to state specifically what was said so that the committee knows exactly what the complaint is? And I haven't heard specifically what was said that the
I think the
gentleman...
gentleman from Georgia is correct.
Mr. Chairman, then I would ask the
gentleman's recognized.
I would ask the stenographer to read back the gentleman's words that made reference to a member and his district.
The committee will suspend while we try to receive a transcript of the words that were said.
The easiest way to have this done is just walk back the words. Just walk back the words.
We haven't had this much fun since Bill Thomas was here. Can it be avoided if that guy just... Yeah, just should just withdraw his words. Mr. Chairman? Mr. Chairman?
We're under suspension until we hear from the clerk, so I'll recognize the gentleman once we go back in, but we're waiting to hear, to get the, so we're not going to have a back and forth until we at least get that transcript.
Yeah, I guess I don't understand why I got so testy with this on the stupid long questions. I should have said, look, if they're doing illegal stuff, we'll go
The committee stands in recess until 12:30.
necessary.
The committee will come to order. Before we resume, I'd like to take this opportunity to clarify the record, and I will yield to Mr. Davis for the purpose of making a statement.
I thank the gentleman and want to be clear that my comments were not directed at a member and were only intended to ensure that small businesses receive the respect that they deserve.
Would the gentleman yield?
Yes.
I think that this is a point we can all agree on, and I thank the gentleman for his clarification. And, Mr. Chairman, I would withdraw my motion.
The motion is withdrawn. If there are no further questions, are there any amendments in the nature of a substitute? Mr. Neal.
My amendment would strike all.
If the gentleman would suspend while the amendment's being distributed.
Mr. Chairman, I reserve a point of order.
Point of order is reserved.
All this goodwill that was just exhibited, Mr. Chairman.
But we said it with a smile,
Well,
Mr. Neal.
It's a short memory here.
It was all about the tone.
I didn't mention the amendment. He wants a point of order.
I think the clerk is distributing the amendment now.
AMT patch with $1 million surtax to cover for it. Okay. Not your man.
Yeah, we'll let him speak on it. And my understanding is he's going to withdraw because he knows it's not germane.
Mr. Neal, you may proceed.
Thank you, Mr. Chairman. Mr. Chairman, I have an amendment here. It's been passed out before Mr. Brady's qualification. My amendment would strike all after the enacting clause of the Chairman's amendment in the nature of a substitute to H.R. 9 and replace it with a 2012 individual alternative minimum tax patch that is fully offset. As you know, I've been a long-time advocate of addressing the problems head-on with AMT. The first AMT was enacted in 1982 to ensure that the wealthiest Americans paid their fair share. However, because the Bush tax cuts decreased tax rates without making corresponding changes to AMT, millions of Americans became subject to the AMT each year, even though they do not make a lot of money. To avoid this result, for the past few years, Congress has enacted an AMT patch. And I hope members of this committee would dutifully take a look someday at what these patches have cost over the years. It's alarming. But we've done the patch in an effort to prevent the middle class from getting gonged. Unfortunately, the most recent AMT patch expired at the end of last year, and so millions of middle-class families would pay thousands more in taxes when they file their returns in April 2013 if we don't enact an AMT patch for 2012. This is a huge deal for Massachusetts. There are 975,000 families, including about 80,000 in my district in Springfield, who will be hit with AMT if we don't enact a patch for 2012. This includes about 785,000 middle-income families who make less than $200,000 a year. Let's not wait until the last minute to protect middle-class families from a big tax increase. Let's do it now. My amendment includes a 2012 AMT patch that will prevent millions of middle-class Americans, including many small business owners, from being subject to AMT. It would be fully offset with a 1.1% surtax on taxpayers making over $1 million. Earlier this week, I read that 93% of the additional income created in the U.S. in 2010 versus 2009 went to the top 1% of taxpayers. The bottom 99% received just an $80 increase in pay per person in 2010, whereas the top 1%, whose average income is just over $1 million, had an 11.6% increase in income. Thanks in large part to the complication of the Bush tax cuts, the wealthiest in this country have done very well for themselves over the past few years, while the rest of the country has struggled. Whatever one thinks of the issue of income inequality, it is happening. And I think that this surtax is a fair way of offsetting the AMT patch, which will ensure the millions of middle-class families don't see it as a tax increase. Mr. Chairman, we've had ample opportunity in both parties over the course of many years to address the AMT patch. It is becoming an expensive proposition for the country and an expensive proposition for small business owners as well as individual filers. So my intention at this point is to withdraw the amendment, but I hope that there will be a chance to fully discuss this in its proper context. There has been some encouraging news. President Obama and the leading Republican candidate for president have both indicated their desire to see an end to AMT. There is some pain that will be inflicted on getting there, but I hope nonetheless that this is something we can do to offer broad relief to middle-income wage earners in America.
Well, I would just say to the gentleman that I think you're correct in that this AMT, which was intended to just hit a few taxpayers, is now broadly hitting the middle class, and we need to find a way to try to resolve it. And I look forward to trying to work with the gentleman on how to do that as we move forward, both in tax reform and as we look at all the expiration of tax policy by the end of the year.
Thank the chairman.
All right. And the gentleman has withdrawn his amendment.
Mr. Pasquale, if you would allow him to speak on it, I will
yes.
withdraw.
I think there are some other members who want to speak on it. Mr. Pasquale, you're recognized.
Mr. Chairman, Mr. Neal, I would have support and will continue to support Richie Neal's, Congressman Neal's amendment because the AMT is a ticking time bomb. It would be no less than derelict of duty to wait until the last second to defuse the situation. Because of the tax cuts of 2001 and 2003, we have a situation where with the 2011 patch, 0.2% of families with kids who make between $75,000 and $100,000 will pay an AMT. Without a patch, right now, that number will rise to 87%. Now, I don't think that's what we want to do. I don't care which side of the aisle you're on. Even with the patch, New Jersey ranks in the top 3 states with the highest number of AMT returns. In North Jersey, most people paying the AMT with an average of 6.36% of all returns subject to the AMT, and each return costs taxpayers $4,000 per return. So we give with one hand and we take back with another hand. That's what's going on. One-year patch will cost $90 billion, and if we extend the Bush tax cuts, a 10-year patch would cost $2.7 trillion. Those are pretty steep numbers. We need to think about what we're doing. It puts both sides in the mode of thinking a little bit more about what we want to cut back on and what we want to do, because a lot of folks in all of our districts are going to be hurt if we don't do anything about this. This money is paid by the middle class, while the top 1% have a effective tax rate of 20%. That's not right. It's not fair, and we should do something about it, Mr. Chairman. I know you feel that we should be doing in responding to this AMT. It is a ticking time bomb, and the longer this year goes on, the more difficult it's going to be to address. Thank you, Mr. Chairman. Thank you, Mr. Neal.
Thank you. Mr. Brady's recognized to speak on the amendment.
I just want to say very briefly, Mr. Chairman, I think there is bipartisan support, not just for extending relief from AMT, but also for repealing it. And in the Republican budget that will be debated today and voted on tomorrow is a provision dealing with fundamental tax reform from this committee that would repeal permanently the AMT. And I also want to point out the AMT is the Buffett rule of its time. It was put in place supposedly to tax less than 100 families to make sure the wealthy paid their fair share. Today it's grown now to capture, if we did not extend it, more than 20 million Americans. It's important we not repeat that mistake going forward, and I look forward, as Chairman does, working with our Democrat colleagues on this. I withdraw respectfully my point of order.
Does Mr. Neal wish to close on his amendment?
Mr. Chairman, I hope that everybody on the committee would do a calculation of what the patches have cost over these years. I recall looking into this 2 or 3 years ago, and it was north of $700 billion. And with the latest round of patches and proposals, we're going to be, I'm sure, well north of $800 to $900 billion in patches after all of these years. We could have fixed it. And when you talk about irony, we're back here year after year with a patch that is less than meaningful, other than providing relief to people in the immediacy, when I think some foresight here could have eliminated what is now a huge part of our budgetary problem. And I thank the gentleman. I withdraw my amendment.
Mr. Teaberry is recognized.
I've got an amendment at the desk, Mr. Chairman.
The gentleman is recognized for 5 minutes.
Mr. Chairman, my amendment is a bipartisan.
Mr. Chairman, if I may, I would also like to reserve a point of order.
Point of order is reserved.
Thank you, Mr. Chairman. My amendment is a bipartisan amendment that mirrors
Could the gentleman suspend while the amendment's being passed out?
I will. Thanks.
Who's doing this with you?
Larson. Oh, it's Larson. It's Paulson. It's Marchant.
I'm voting no. Give your amendment.
The gentleman may continue.
Thank you, Mr. Chairman. As I was saying, my amendment is patterned after bipartisan legislation that would allow and extend 100% bonus depreciation through the end of this year. The legislation also relaxes the limitation placed on corporate AMT tax credits that can be used in lieu of bonus depreciation. I'd like to thank my colleagues, Mr. Larson, for introducing this legislation with me, as well as colleagues on the committee, Mr. Paulson, Mr. Neal, Mr. Marchant, and Mr. Pasquarel. I'd also like to thank other colleagues on the committee who have co-sponsored this, as I said, bipartisan piece of legislation. Our legislation in the amendment will enable businesses to access capital, invest in new facilities and new equipment, and help create more American jobs. There is broad bipartisan support and consensus that this incentivizes capital reinvestment, and it can help spur economic growth in our economy now. Allowing companies to use these tools for capital reinvestment is a common sense incentive to create jobs that this committee and this Congress can certainly help with, Mr. Chairman. Having conversations with you this morning, I now understand that this may not be the time nor proper venue to pursue this amendment, but I look forward to working with you to get this provision into law sooner rather than later. I yield back.
I would just say to the gentleman that I support the policy embodied in this amendment, and given the fragile economic recovery, I think this is an important provision to help businesses grow and invest and create jobs. As the gentleman knows, this was incorporated in the House-passed payroll tax cut extension last December, but in the conference committee, it was not agreed to by the Senate. But based on recent events, it's my understanding that Senate Democrats have become much more interested in extending this important investment incentive, and as the gentleman is aware, the amendment is not germane to the underlying measure, but I do want to assure him that as the process moves forward and we negotiate a small business tax relief package, hopefully with the Senate, I will work with him and the Senate to try to include this provision in any version that would reach the President's desk.
Mr. Chairman?
I believe Mr. Teaberry, yes, Mr. Neal.
Perhaps Mr. Teaberry would yield. Mr. Chairman, you hit the argument correctly when you said it's a worthwhile concept. I think that the legitimate discussion point is how long? Right. Can it be used for the purposes of investment in jump-starting economic activity and altering behavior in a downturn? And then at what point do we decide to let it recede? And it's a worthwhile concept. We've used it in the past many times, Democrats and Republicans. And at the same time, I think we need to be able to say that there will come a point when it expires.
Mr. Teaberry.
Mr. Chairman, as you know, this particular provision will expire at the end of this year.
All And
If there's no other discussion, Mr. Chairman, I will withdraw my amendment.
the amendment is withdrawn.
Thank you, Mr. Chairman.
Mr. Blumenauer is recognized for the purposes of offering an amendment.
Thank you, Mr. Chairman. I have an amendment at the desk.
Yeah, and if the gentleman would just suspend while the amendment's being handed out.
Mr. Chairman, I would reserve a point of order.
Point of order is reserved. All right, the gentleman may proceed.
Thank you, Mr. Chairman. I would begin by pointing out where my friend and colleague, Mr. Neal, left off. We have, with the alternative minimum tax, we have spent hundreds of billions of dollars in a very predictable way with various patches. It is a phony cost because we never really had any intention of fully having the vengeance of the alternative minimum tax visited upon our constituents. But it is an accounting gimmick that as long as it remains on the law, as law, it artificially reduces the budget deficit we have going forward. But in fact, it distorts the budget picture. It creates problems for this committee. It confuses the public. And in the off chance that we actually have legislative breakdown, which has happened on occasion, then we could really damage people. Well, I think much is the same situation that we're facing with the transportation issue, which I have raised on occasion with the committee, and look forward to the time when we address infrastructure funding as a committee, one of our most important responsibilities, but we really haven't focused on it of late. We have already transferred $34 billion general fund borrowed dollars to keep the system afloat. Today, we will be debating on the floor a budget that actually will allocate less than what is already committed to your states, your cities, your transit districts, your contractors. Under contract is $56.3 billion, and we're going to be debating a budget that is less than 50. We keep and we are playing sort of a game of Russian roulette with the construction cycle this summer. And whether it's a 30-day or a 60-day or a 90-day extension, it effectively destroys the ability of your transportation agencies, your contractors, your engineers, your local government to take full advantage of a construction cycle. Now, in Oregon, where it rains all the time, that's less of an issue than some of you where there is a very short construction cycle. You pack activities in to the summer months. We're going to lose it. We're going to lose it. And we don't need to. The Senate has passed a bipartisan bill that is fully funded for 2 years that'll at least get us through this summer and next summer. If we really believe, in the name of economic development, that we are comfortable borrowing another $46 billion from the Chinese and others for this bill, you know, I would respectfully suggest that it's time maybe to consider doing something that is more comprehensive, because the combination of what the Senate has done and awaits our action. We could pass this before we go home. And $46 billion. We could close the gap for a 3, 4, or 5 year transportation bill, put people to work on a longer-term solution that is fully within our purview, provide certainty for the people who rely on us, and get back to the point where we've got a longer-term vision of how we're going to rebuild and renew the country. This didn't used to be partisan. As a 12-year member of the Transportation Infrastructure Committee, I remember when both parties kind of debated issues, came together, passed bills, even faced down Bill Clinton and Newt Gingrich. Some of you are old enough to remember that. I appreciate that this is not in order, given the ways the rules are constructed right now. And so I'm not going to force it, but I want to make the point that this is what we should be doing. If you really want to borrow $46 billion from the Chinese, what we should be doing is pass the Senate bill, which we could do before we go home, and invest this amount of money into a longer-term reauthorization, which would buy us time as a committee to look at longer-term funding alternatives that would make a big difference for our job. And, as I say, would not necessarily have to split us along partisan, ideological, or geographic lines. I work with a broad bipartisan, nonpartisan coalition that ranges from engineers and architects to the AAA truckers and bicyclists. And they're in accord, and they would work with us on a constructive program going forward. And I look forward to the day when we can do that.
All right.
Thank you, Mr. Chairman. I'll withdraw my amendment.
All right. I think Mr. Neal would like to comment on the
I'm sorry.
amendment before.
I am in support of Mr. Blumenauer's amendment here. The construction season in New England is entirely different than the construction season in Texas. What frost heaves do to macadam, we're witnessing now manhole covers being raised across New England. And once you raise those manhole covers and you start to work on the grates, the work has to proceed. When you lose a month or two in New England, you've pretty much given up on the construction season. The best way to get people back to work quickly is with public works investment. We held very good hearings with Mr. Teaberry and I and Mr. Blumenauer. We even had the Chamber of Commerce endorse our position. The Business Roundtable endorsed our position. And here we are, we find ourselves now lagging as we proceed to another critical run-up this weekend when men and women across the country are going to have to worry about whether or not they're going to be working on Monday. And it strikes me that the Senate proposal makes a great deal of sense, but just as importantly, it shows what's happened to modern congressional life. The easiest piece of legislation to pass in this Congress for my time, more than 2 decades here, was the Transportation Authorization and Appropriations Bill. We used to all rally around that because you could see the immediacy of the impact. And lastly, one of the most powerful anecdotes as to unemployment rates, it's watching that man or woman in the street with a red flag. If there's a traffic tie-up and they've got that red flag, men and women are working every single day. And for those of us across the Northeast, we run the risk of forfeiting an entire construction season if we don't move on this legislation very quickly. I thank the gentleman.
Thank you. Mr. Thompson's recognized.
Thank you, Mr. Chairman. I want to agree with all that's been said in regard to the transportation bill, everything from the value that it would have, the jobs that it would create, the partisanship that it's sadly fallen victim to. I just want to add 2 things. One, everybody's talked about the importance of helping businesses, small businesses, as your bill professes to do, the bill before us today. Not fixing the transportation problems is a hidden tax on business. We all know that. People can't get their workers to work. People can't get to work. You can't get your product to the market. We need to step up and pass the transportation bill and fund it. And then lastly, I just want to make sure everybody understands what the author of this amendment said. The Senate transportation bill is fully paid for. The reference to borrowing from the Chinese is the $46 billion that this bill before us today would borrow from outside lenders. The transportation bill itself, Senate transportation bill, is fully paid for. Yield back.
Thank you. I believe Mr. Blumenauer.
Yeah, I will withdraw, Mr. Chairman, and look forward to the time when we can talk about this in regular order.
All right, the amendment is withdrawn. Mr. Crowley is recognized for the purpose of offering amendment.
Yes, Mr. Chairman, I have an amendment at the desk.
All right, the gentleman will suspend while the clerk distributes the amendment.
And, Mr. Chairman, I again reserve a point of order.
Point of order is reserved.
Shelley wants to speak.
Okay, on Crowley's amendment.
Be a good one.
Thank you.
Thank you. Yeah.
Mr. Crowley is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you for the time. The Crowley Amendment is a very simple one and goes to the heart of any real tax reform legislation that Democrats champion, that of making the tax code more fair for American workers and businesses, and ending the incentives for companies to send U.S. jobs overseas. My amendment does this by denying the tax deduction in this bill to any company that reduces the number of American workers and jobs while correspondingly increasing their foreign workforce. Additionally, if a company offshores U.S. jobs the next year after this one-year tax expenditure expires, the funds would be recaptured or taken back by the taxpayers. This is so a company can't benefit from this tax expenditure this year and then export American jobs the next year. We all agree the U.S. tax code is too complex and impedes growth here in the States. Unfortunately, it also encourages the offshoring of American jobs to foreign countries. And the base bill will exacerbate the problem of incentivizing companies to move their production and jobs offshore if left as is. That is why we need to pass this amendment to block this new tax benefit to any U.S. company that decides to offshore or export U.S. jobs. It's simple: a tax break to keep Americans working, or a tax break if you send your jobs overseas. Americans should not be subsidizing the destruction of American jobs. Let me state, Democrats recognize we live in a global economy, and we recognize that many of our companies need to operate internationally to remain competitive and expand their markets and market share. But American taxpayers should not take their hard-earned tax dollars, $46 billion in this case today, to subsidize the sending of U.S. jobs to foreign countries. Democrats have worked hard over the past several years to end the practice of incentivizing of offshoring of U.S. jobs in the tax code with some success. And that is why I'm hoping that the majority will accept this amendment, both to end the reward for companies to export U.S. jobs, as well as to address the poor record of the majority in ending these types of tax benefits over the past several years. For example, when Democrats controlled Congress, we successfully and often over the strenuous objection of the Republicans closed a number of these gaping tax abuses, including one particular tax loophole that allowed U.S. companies like Guardian Industries of Michigan to claim tax credits for taxes paid abroad when they were not actually paying taxes on that same income in the United States. This would be akin to a family claiming the child tax credit while not having any children. Democrats ended that tax abuse. And Democrats shut down the ability of some fortunate Americans to hide their U.S. income in overseas secret Swiss and other foreign bank accounts. Besides hiding this money offshore so it could not be reinvested in the United States, it also socked middle-class families who don't have access to Swiss bank accounts with paying the taxes for those people who unjustly hid their income overseas. Congress closed that loophole with legislation. Let me assure you, any constituent who does not have a Swiss bank account benefited from the closure of this tax abuse. Or Democrats closed the very egregious abuse that benefited foreign-owned multinational corporations over their American competitors, which provided a perverse incentive for foreign companies to bolster their bottom line by shipping money out of the U.S., disincentivizing the hiring of Americans or investment in the U.S. And when we closed these tax abuses, Democrats took the new revenue and reinvested it back in American workers. Democrats use these funds to provide tax credits for companies to hire American workers. One such benefit, which provided tax cuts to companies to hire workers, was shown by the Chamber of Commerce of Queens, my home county, to have resulted in the direct hiring of workers in my district in Queens. Incentivizing the hiring of U.S. workers is a deficit-neutral way by ending tax abuses for companies to export jobs overseas. That is the tax policy that this Congress should be following. That is why I'm offering this amendment today. Mr. Chairman, we have an opportunity here to continue the scrubbing of the tax code to ensure that our constituents, the American taxpayer, are not subsidizing the offshoring of U.S. jobs. So if you want to stop the offshoring of U.S. jobs to places like China, I urge you to unanimously endorse this amendment and support it today. It's simply, once again, a tax break to keep Americans working here in America, or a tax break to send your U.S. jobs overseas. And with that, I yield back the balance of my time.
Mr. Roscom is recognized for 5 minutes.
Thank you, Mr. Chairman. I rise in opposition to the amendment. And just in a nutshell, you know, the minority today has been arguing against a more complex tax code by making the implication that the small business tax break is a complexity, and yet ironically is offering a complexity upon what they have argued is a complexity. So let's go into that just for a minute. There's an implication in the amendment that is, if you are expanding a business overseas, then that is at the cost of the local business. And I think that needs to be explored much more rigorously. You can imagine all kinds of scenarios where a company is able to expand its business overseas, not at the expense of local employees, but the markets are completely different. So with that, I urge no vote. I will.
Do you believe that the U.S. taxpayer dollars should be used to grow business opportunities overseas at the expense of American workers?
I believe, reclaiming my time, I believe that U.S. taxpayer dollars should be used wisely and expeditiously, and that we need to be competitive on a global basis. The weakness of the amendment, in my view, is that there is no relationship in the plain language of the amendment between the diminishment or the diminution of local activity and prosperity overseas. So ironically, you can create an environment where you can have a U.S. business that is competing more overseas, creating more wealth here in the United States, and for a completely unrelated market event, wouldn't be able to take advantage of this because of this. So if
the gentleman continue to yield for another question?
I'm happy to.
Assuming that they do benefit and they're growing overseas and the company is profitable, do they need this tax break to begin with?
Reclaiming my time, I think most small businesses are begging for mercy right now. Most small businesses are looking out over a landscape where they're convinced that they're not undertaxed. That's not the problem. They're looking to Washington to come up with remedies that make sense. I understand the nature of where you're going with it, and I applaud you for the general theme, because I think ultimately what you're arguing at some level makes sense. But let me just make it clear, there's not a relationship in the plain language of the amendment under subsection 1 and subsection 2 with a cause and effect. I think that's a structural weakness to the amendment. I urge a no vote, and I yield back.
All right. Ms. Berkeley is recognized.
Thank you, Mr. Chairman. Nevada is suffering from the highest unemployment rate in the country. We are stubbornly just under 13% and have not had much success in our attempt to lower our unemployment rate. I am a great believer that we need to come up with practical solutions to help create jobs here in the United States of America. I see 3 problems with this piece of legislation. The first problem is the majority's justification for this bill is, in fact, that it will lead to the creation of more jobs. The only problem I have is I don't see anything in this bill that limits the benefit to a taxpayer that creates jobs. There isn't anything in the bill that would prevent an employer that reduces employees this year from claiming the deduction. The second issue is the majority's argument that there's an indirect link to job creation I think that link is so tenuous and so indirect that I see no causal connection between this legislation and helping to create more jobs here in the United States. There is no requirement in the legislation that the tax benefits provided be invested or reinvested right here in the United States of America. And to Mr. Crowley's amendment, we already provide unconscionable subsidies to American companies that ship our jobs overseas. Providing more taxpayer subsidies for these businesses that ship American jobs overseas, I think, is the height of folly. There's nothing in this proposal to be used that would prevent a corporation from expanding overseas, and I'm having a very difficult time, with all due respect to my colleague on the other side of the aisle, of seeing how providing this 20% tax benefit without protecting American workers and ensuring that companies are not using this deduction while they are creating jobs overseas. That does absolutely nothing for job creation in the state of Nevada. And so I support this amendment to the legislation, and I urge my colleagues to support it as well. And I yield. Yes, I do, Mr. Crowley.
I think the important point here to make, and I appreciate the comments from my friend from Nevada, is that we're talking about not private sector investment in these small businesses or large businesses. We're talking about the American taxpayer and his or her dollars that we are now going to make available to American companies, regardless as to whether or not they're creating jobs here in the United States or helping their bottom line here in the United States. I don't begrudge a company that, as I said in my text, that is making money overseas. That's not the issue here. What we're saying is that the money that we, the U.S. Congress, the people of the United States, are investing in small businesses ought to be creating those jobs and those opportunities right here in America and not incentivizing the creation of those jobs overseas. And that is the crux of this amendment. Either you vote in favor of this amendment, which is in favor of growing jobs here in America, or you vote against it, which leaves open the opportunity to have expansion for these companies overseas. It's very clear. Yield back.
Mr. Brady's recognized.
Well, I think, as Mr. Roscom said, it is important for us to begin eliminating the complexity in the tax code and to become more consistent. I noted that in the bonus depreciation issue, which has broad bipartisan support, is raised by Mr. Neal today, and the R&D tax credit, another bill which has wide bipartisan support, and the President signed as well as bonus depreciation. Even the subsidies within the President's own health care plan doesn't include this special provision, nor do they exclude the LA Dodgers, Larry Flint, Donald Trump, or others. It has already been signed into law by the President, the principle that we not pick losers and winners within this economy and damage the economy in the process. And I think, too, as well-intentioned as this amendment is, it fails to recognize our competitiveness around this world. It's not enough to simply buy American. We need to sell American, compete throughout the world. And oftentimes, in chasing those customers and wins, not all of those products can be developed here in the United States. Sometimes sales reps have to be and service reps in other countries so that we can compete successfully against the Chinese, against the Europeans, against others throughout the world. And I also recognize as well that in some cases our businesses have no choice. America's deteriorating business climate, a tax code that punishes them here and when they compete abroad with higher taxes and higher burdensome regulations, sometimes force these companies to locate where they would prefer not to. I think the ultimate solution to creating the strongest economy in the world for the next 100 years is to fix the underlying problem. Tax code that's obsolete and uncompetitive, tax rates that are too high, regulations that are burdensome, a business climate that doesn't favor job creation in America. So I would urge strong support in order to try to get this economy back on track, that we not add provisions that could actually harm them And, Mr. Chairman, I also need at this time to withdraw my point of order as well.
Point of order is withdrawn. Mr. Pascrell is recognized.
Thank you, Mr. Chairman. Mr. Chairman, I think that this is and I think Mr. Crowley's alluded to it, it is a clear case of double jeopardy. Because this impacts what Congressman Crowley's talking about here today, impacts upon the trade agreements that we have made. Number one, certain foreign countries that we do business with, we might say many foreign countries that we do business with, have a different tax code than we have, a different set of standards when they do taxing. Those very countries subsidize their industries, their businesses, and therefore they are already at an advantage. They're already at an advantage when we begin to trade with them. We are at a disadvantage. In fact, not only are our companies at a disadvantage from that standpoint, that they're competing against companies that are already getting big bucks from the government, whatever that country is. But we now go a step further. We subsidize American companies to create capital in other countries. This is double jeopardy, no question about it. There are winners and losers out of this system. There are winners and losers. So we may be saying we don't want to precipitate winners and losers. We are exactly doing this, and that's what I believe. I believe that's the spirit of the amendment and the spirit with which it was produced today. The subsidization. There's already an advantage, and what we're doing is adding this advantage by allowing American companies to get taxpayers' dollars to do business in another country. I think that this is wrong. I think that we should do something about it. And the trade deals that we're going to be coming before us, since that's part of our responsibility, I think we need to take a look at that. They're no longer hardcore protocols. They are, look at every one of these trade deals. And you know we're talking about countries that, first of all, have manipulated their currency, not only China. They have already received subsidies from the government within which the country exists. How can our guys and gals compete with that? You cannot do it. We have established a system that creates winners and losers, whether we know it or not. That's not capitalism. That's not the free market. That's being ignorant to the facts of what we've done in the Congress of the United States of America. So we subsidize the few and the middle class. You talk about the tax code, 90% of it is written by folks who make a lot of money and companies that have a lot of money. The average guy has no input into that tax code. The lawyers from those companies, the multitude of lawyers, have actually written the tax code. The average guy, what does he have to say about that tax code? It's this thick, this heavy, and it's been written by those people who I don't deal with every day in my district. Who writes the tax code? What does the taxpayer have to do with it? So we are at double jeopardy here, Mr. Chairman. Thank you.
Thank you. Mr. Crowley is recognized to close on his amendment.
Thank you, Mr. Chairman. I thank you for the opportunity for this debate as well. And I appreciate the comments of my colleagues on both sides of the aisle. I think two things to point at. One is I do recognize that we are in a global economy. Many of you know that we've discussed this on many occasions, and I have supported some of the trade agreements. I recognize that we are in a global economy and that we need to be competitive. And I also recognize that right now we're not winning in that competition. It's reflective in our own economy right now and the level of debt that we have, ratio to our GDP, as well as looking at other countries and where we're borrowing our money from today. We should not be, I believe, investing U.S. tax dollars, not private money, not money that overseas companies are sitting on right now and will not bring back to the United States for investment in their own country, but have that overseas. We're talking about American money here today, investing it in small companies or large companies that then take that money and grow or expand outside the United States and don't provide jobs for American people. If you're someone who's, working 2 or 3 jobs right now because you can't get one job to really take care of your family, how would you feel if you're paying taxes to your federal government and then your government is taking that money and giving it to small businesses or businesses, and those jobs that are being created are not going to be one for you to provide?
Would the gentleman yield?
Mr. Donnie, yes.
The President has put forward a national export initiative with a prime goal of expanding small and mid-sized firms in their capacity to export. And if that indeed is the case, many of these small firms create products here, but then they need distribution networks overseas to do this. Your amendment would basically incur a tax penalty on the part of these companies at the expense of other companies who are not exporting, and I think it goes against the spirit of what the President
Reclaiming my time, I disagree with the gentleman from Louisiana. What the President is attempting to incentivize is the creation of products here in the United States that will create more jobs here in the U.S., that then that product could be exported overseas to a market that wants that product, therefore driving more jobs to the United States. So I don't accept your logic in this particular case, although I appreciate you very much. I don't accept it in this particular matter. What is the goal of this legislation? What is the goal of the small business tax cut of 2012? Is it simply to give small businesses and the owners of those companies more profit? Is that the motivation, is to give more profit to a very select few? Or is the motivation here to hire more Americans, Americans who are out of work, who need work? There are so many people who are suffering in this country today. More people are being hired, yes, 250,000 more private job sector jobs have been created over the last month, and over 4 million jobs, private sector jobs, have been created over the last 2.5 or 3 years. But more needs to be done. We should be investing in American workers, and that's what the crux of this amendment does. It says to the Congress, stand up for the American taxpayer. United States Congress, the people that we elect, please stand up for the American worker. That's what this amendment says. A dismissal of this amendment, a vote against this amendment, says the exact opposite to the American taxpayer and to the American worker. And with that, I yield back the balance of my time.
As no further members seek recognition, the question is on agreeing to the amendment offered by the gentleman from New York, Mr. Crowley. All those in favor signify by saying aye.
Aye.
Those opposed, no. No. In the opinion of the chair, the noes have it.
Mr. Chairman, a roll call vote, please.
The clerk will call the roll.
Mr. Herger?
No.
Mr. Herger, no. Mr. Johnson?
No.
Mr. Johnson, no. Mr. Brady?
No.
Mr. Brady, no. Mr. Ryan?
No.
Mr. Ryan, no. Mr. Nunez? Mr. Nunez, no. Mr. Teaberry? No. Mr. Teaberry, no. Mr. Davis? No. Mr. Davis, no. Mr. Reichert? No. Mr. Reichert, no. Mr. Bustani? No. Mr. Bustani, no. Mr. Roscom? No. Mr. Roscom, no. Mr. Gerlach?
No.
Mr. Gerlach, no. Mr. Price? Mr. Price, no. Mr. Buchanan? No. Mr. Buchanan, no. Mr. Smith? Mr. Smith, no. Mr. Schock? No. Mr. Schock, no. Ms. Jenkins? Ms. Jenkins, no. Mr. Paulson? No. Mr. Paulson, no. Mr. Marchant? Mr. Berg? No. Mr. Berg, no. Ms. Black? No. Ms. Black, no. Mr. Reed? No. Mr. Reed, no. Mr. Levin?
Aye.
Mr. Levin, aye. Mr. Rangel? Mr. Stark?
Aye.
Mr. Stark, aye. Mr. McDermott? Aye. Mr. McDermott, aye. Mr. Lewis? Aye. Mr. Lewis, aye. Mr. Neal? Aye. Mr. Neal, aye. Mr. Becerra? Mr. Becerra, aye. Mr. Doggett? Aye. Mr. Doggett, aye. Mr. Thompson? Mr. Thompson, aye. Mr. Larson? Mr. Blumenauer? Mr. Blumenauer, aye. Mr. Kind? Mr. Kind, aye. Mr. Pascrell? Mr. Pascrell, aye. Ms. Berkeley? Ms. Berkeley, aye. Mr. Crowley? Mr. Crowley, aye. Mr. Marchant? Mr. Rangel? Mr. Larson? Mr. Larson, aye. Chairman Camp?
No.
Chairman Camp, no.
The clerk will report the vote.
14 ayes, 21 nays.
There being 14 ayes and 21 noes, the amendment is not agreed to. Mr. McDermott's recognized for the purpose of offering an amendment.
Thank you, Mr. Chairman.
And if the gentleman would suspend while the amendment's being distributed.
Okay.
Mr. Chairman, I reserve a point of order.
Point of order is reserved on the amendment.
Thank you.
Mr. McDermott, they're going to say it's not your man, ask him to tell you why.
Hmm?
If you raise a point of order, but it's not your man, ask him to tell you why.
Yeah, yeah. Mhm. Mhm.
Gentleman may proceed.
Thank you, Mr. Chairman. I think all of us care about jobs. And the bill that's before us, presented by the majority leader, Mr. Cantor, is an illusion for PR purposes as we go home for a 2-week period in our district. Standing on top of the Treasury, throwing $46 billion out into nowhere with no direction as to how it's to be applied is simply not a good way to create jobs. In fact, the CBO ranked this as, out of 13 methods of stimulating job growth, they ranked this next to last. That's where they put it, next to last. That's CBO, our group. And the fact is that it is not directed at anything. So the amendment that's before us, I try to be bipartisan. Whenever I see a good idea on the other side, I grab it. And Mr. T. Berry had a good idea. And Mr. Camp has actually had this in his legislation in the past. And this provision would give 100% exemption if the money was invested in capital expenditures in the next year. Now, that to me seems like a focused way to help small business. To just give money to people, whether they're hiring or firing or laying off or whatever, gets nothing if your real issue is jobs. Now, if your issue is, Mr. Crowley put the question right when he said, is this about giving money to small businesses? Because if that's what it's about, then okay, I understand that. But if it's about jobs, then let's talk about a way that actually works. The CBO said that the wealthiest 4% of taxpayers, those who have incomes over $200,000, will get 84% of this tax cut. 84% is going to go to people above $200,000. Now, 16% will go to those people below that. Actually, 1/2 of it goes to millionaires. So you're putting $46 billion out there, and half of it's going to millionaires. That's not a good proposal. Mr. T. Berry had a good proposal, and I support it. I signed on to it. Many members here have signed on to it. And I think that it's something that we ought to put on the floor for people to discuss. Now, I also think we ought to pay for these things. Part of the reason we're in the mess we're in, that everybody agrees there's a mess, but part of the reason was we don't pay for stuff. We don't pay for wars. We don't pay for Bush tax cuts. We never pay for anything. So I have a pay for here. It's paid for by denying the 5 big oil companies and gas companies their Section 199 domestic manufacturing deduction. Now, that was put in by the Congress in 2004. This is not something that's been there for 100 years. This was put in 2004, a giveaway to companies that are charging me $4.19 a gallon for gasoline in Seattle. Everybody here says, these awful gas prices. But we're still giving big giveaways to the companies who are doing it to us. And I think it's a good place to pick up the money and pay for this amendment. It is a substitute, really, for an untargeted benefit to make it a targeted one where we can actually assess what is actually being done and is it creative and helpful for the economy. Now, I was very careful, as you'll see from this huge piece of paper you got from me. I went and rewrote it last night so that it's germane. It's inside the section that Mr. Camp has created in this bill, and I would oppose any attempt to just throw this out because it's not germane. And I think that this is an issue of whether we're serious about jobs or are we just giving money away to certain groups of people at election time. I yield back the balance of my time.
Thank you. Mr. Barthold, as a point of clarification, has the Joint Committee on Taxation done any research on the distributional aspects of the proposed legislation?
The short answer, Mr. Chairman, is no. Mr. Levin and I discussed this earlier, that we're trying to do some work to do that, and if I get it complete, I'll get it to all the members as soon as we can, but it's an ongoing project.
All right. Thank you. Mr. Levin's recognized.
I support this amendment, and I hope we'll all pay attention to it. It's not only germane, it's cogent. This really illustrates the differences in our two approaches. The CBO study shows, and I wish all of you would look at this, and I place it in the record, Mr. Chairman, the CBO study.
Without objection.
Of March. 75% in terms of distribution of private sector firms have 9 employees or less. That's 75%. Another 12% have under 19. So that means 87.5% in terms of private sector firms have under 19 employees. And if you go up to 49, it's 94%. This is 500 employees. That means that this notion that this is a small business tax cut act is a complete misnomer. A complete misnomer. We have supported small business legislation. We passed it in 2010. We reduced the capital gains rate on the sale of qualified small business stock to 0. I happen to have introduced that. We passed 179 expensing small business new property. The Hire Act reduced the payroll tax on additional employees of small business. This was small business legislation, targeted and effective. Now, Mr. Camp, I just want you to know, we just have received from the Center on Budget and Policy Priorities a distribution sheet. Now, we'll see what you come up with, Mr. Bartow. This is what they have concluded. The urban Brookings Tax Policy Center estimates that nearly 49% of the $46 billion tax cut would go to people with incomes over $1 million. That's because of this 500 number. 49% of the tax cut would go to 0.3% of people with incomes exceeding $1 million in 2012. They'd receive an average tax cut of $44,000. The wealthiest 4% with incomes above $200,000 would receive 84%. Only 16% of the tax cut would go to the 96% of Americans making less than $200,000. This is another bonanza for the very wealthy. It is not targeted. It is essentially not for the typical small business person. So we should accept this amendment in lieu of. Also, it's unpaid for. You talk about not picking winners and losers. You're just throwing this out, and it's the very wealthy who are going to catch most of it. Do you really want to do that? Another bonanza to the very wealthy, unpaid for? That's what we should be discussing, and discussing seriously. So that's why I think this is reckless political theater, and I don't think you want to engage in it. Now, we'll see, Mr. Bartow, if your analysis, distribution analysis, is very different. I'm sorry, it isn't ready. As soon as it is, we'll look at it. And I strongly urge that all of us, before we dream of taking this up on the floor, will think through its consequences. You can't wrap something around yourselves and claim it's a small business tax cut when most of it goes to the very wealthy. Most of it will go to firms well beyond those with 40 or 50 employees. That's not small business. That's not tax reform. It's the antithesis of tax reform. That isn't something targeted for jobs. Essentially, it's untargeted for the pockets of the very, very wealthy. And in a time where we need job creation, we don't need a further destruction of sensible tax policy. I very much urge the acceptance of this amendment and the rejection of the basic bill.
Yes, gentleman from Georgia.
And I ask, Mr. Chairman, that the Center on Policy and Budget Priorities document of March 28, 2012 be placed in the record.
Without objection. I don't think any of us have seen that other than you, and I would say that is not the nonpartisan type of analysis that we're going to get from the Joint Committee on Taxation. So I look forward to hearing.
Label it.
Well, I know who the group is.
Organizations.
They tend to be on the left, and that's fine. But
don't call them a partisan organization.
Gentleman from Georgia is recognized.
Mr. Chairman, could you define what you mean by this organization being on the left? Is that possible?
Does the gentleman seek to speak to the amendment?
Yes.
All right.
I want to say I support this amendment. I think it's necessary, and I want to identify with the words and the statement of Ms. Levin. This is unreal. It's unbelievable that we're prepared to reward those at the top, the very rich. And I think this amendment is necessary, and it should be supported on its own.
All right. Is there any further recognition? Mr. Brady.
Mr. Chairman, setting aside for a moment the poor decision to link job-creating policy with job-killing policy, especially on our energy manufacturing workers, setting aside the observation that this amendment would also apply to companies such as Donald Trump, Larry Flint, the LA Dodgers, I initially made a point of order to the amendment because it's not germane to the amendment of nature's substitute. The amendment violates House Rule 16, Clause 7, because the amendment creates a new deduction that's not related to the underlying amendment in the nature of a substitute. Also, it restricts Section 199 in a way that is also not related to the underlying measure.
Does Mr. McDermott wish to be heard on the point of order?
Well, Mr. Speaker, or Mr. Wish you were the Speaker.
I'll take the promotion.
Mr. Chairman.
These days it may be a demotion.
The gentleman is recognized for 5 minutes.
One of the difficulties is there are no rules for germaneness in the committee. So when you go to the Speaker and you go to the parliamentarian, this is germane. It is inside, it's a deduction, just like yours is a deduction. I simply took your deduction out and put another one in its place. So in that sense, it's germane. The 199, you created the nexus. I just changed the way we did it. All of this was done by looking at what the parliamentarian said would be germane on the floor. Now, you can come in here, and I realize that the parliamentarian's a long way from here. The parliamentarian actually sits in the chairman's seat. He decides on germaneness, and in fact, this is germane. I understand why you don't want to vote on it. That's very clear, because this is a substitution that's very targeted as opposed to the other one, which was wide open. But the fact is that it fits in this part of the law. When we wrote it originally, we hadn't looked carefully at it. That's why we spent last night and went down to bill drafting, got it all done with bill drafting to make sure that it was germane to this issue. So I object to the gentleman's exercising his point of order to pull this out.
Could I ask you, Mr. Chairman?
Yeah, I'm prepared to rule on the point of order, but if the gentleman would seeks to be recognized, I'll recognize Mr. Levin.
How is it not related? You have a bill with 20% for anybody under 500,000, untargeted. This is bonus depreciation accelerated and paid for. I don't get it.
There are two main, if the gentleman is finished, there are two main reasons why the amendment is not germane. One is that you are stripping out a deduction and placing in a completely unrelated deduction and also adding in the Section 199. Those two reasons make the amendment not germane.
But 199 is the pay for.
Yes.
So the pay
That's
for
not in the underlying bill.
It's a tax provision.
But it's not in the underlying bill. I'm prepared to rule unless there's anyone who hasn't spoken that wants to be recognized.
May I ask a question of clarification?
And I will say, this is an amendment that was not shared before today. It would be helpful if something of this complexity was shared earlier than the moment of presentation.
Well, except you just rewrote the bill to place it 200 separately from 199. When did we get that?
Does the gentleman is recognized on his.
I want to understand that you're saying that because we put a pay for in, that's what makes it non-germane?
Right. It's not the only reasons. It's one of two reasons.
And the other one was that you had a deduction and I replaced it with another deduction.
Completely unrelated deduction, yes.
But it's to the same qualified businesses. Any qualified business who has used their money to invest in capital investments, there's really no difference there. The issue really is that I think what you're hanging your hat on is you don't like my pay for. And I'm willing to.
I will say the new deduction is an unrelated matter, so that is why it's not germane. The chair is prepared to rule. The amendment is not germane to the amendment in the nature of a substitute and therefore violates House Rule 16, Clause 7. The point of order is sustained. The amendment is not in order.
Yeah,
Are there any further amendments?
I'd like to appeal the decision of the chair.
Move to table, Mr. Chairman.
The question is on the motion to table. All those in favor of tabling the motion, say aye.
Aye.
All those opposed, no.
Roll call.
The ayes have it.
Roll call.
A roll call is requested. The clerk will call the roll.
Mr. Herger?
Aye.
He said aye.
Aye. Mr. Herger? Aye. Mr. Johnson? Mr. Johnson, aye. Mr. Brady? Mr. Brady, aye. Mr. Ryan? Mr. Ryan, aye. Mr. Nunez? Mr. Nunez, aye. Mr. Teaberry? Mr. Teaberry, aye. Mr. Davis? Mr. Davis, aye. Mr. Reichert? Mr. Reichert, aye. Mr. Bustani? Mr. Bustani, aye. Mr. Roscom? Mr. Gerlach? Mr. Gerlach, aye. Mr. Price? Mr. Price, aye. Mr. Buchanan? Mr. Buchanan, aye. Mr. Smith? Mr. Smith, aye. Mr. Schock? Mr. Schock, aye. Ms. Jenkins? Ms. Jenkins, aye. Mr. Paulson? Mr. Paulson, aye. Mr. Marchant? Mr. Berg? Mr. Berg, aye. Ms. Black? Ms. Black, aye. Mr. Reed? Mr. Reed, aye. Mr. Levin?
No.
Mr. Levin, no. Mr. Rangel? Mr. Stark? Mr. Stark, no. Mr. McDermott?
No.
Mr. McDermott, no. Mr. Lewis? Mr. Lewis, no. Mr. Neal? Mr. Becerra? Mr. Becerra, no. Mr. Doggett? Mr. Doggett, no. Mr. Thompson? Mr. Thompson, no. Mr. Larson? Mr. Larson, no. Mr. Blumenauer? Mr. Blumenauer, no. Mr. Kind? Mr. Pascrell? Mr. Pascrell, no. Ms. Berkeley? Ms. Berkeley, no. Mr. Crowley? Mr. Crowley, no. Mr. Roscom? Mr. Roscom, aye. Mr. Marchant? Mr. Rangel? Mr. Neal? Mr. Neal, no. Mr. Kind? Chairman Camp?
Aye.
Chairman Camp, aye.
The clerk will report the vote.
21 ayes, 13 nays.
There being 21 ayes and 13 nays, the motion to table is agreed to. If there are no further amendments, I'll recognize Mr. Herger for the purpose of offering a motion.
Mr. Chairman, I move that the committee favorably report H.R. 9 as amended to the House of Representatives.
The question is on favorably reporting the bill. All those in favor signify by saying aye. Aye. Those opposed signify by saying no. The ayes have it. The motion is agreed to. The clerk will call the roll.
Mr. Herger?
Aye. Aye.
Mr. Herger, aye. Mr. Johnson? Aye. Mr. Johnson, aye. Mr. Brady? Aye. Mr. Brady, aye. Mr. Ryan? Aye. Mr. Ryan, aye. Mr. Nunez? Mr. Nunez, aye. Mr. Teaberry? Aye. Mr. Teaberry, aye. Mr. Davis? Aye. Mr. Davis, aye. Mr. Reichert? Aye. Mr. Reichert, aye. Mr. Bustani? Aye. Mr. Bustani, aye. Mr. Roscom? Aye. Mr. Roscom, aye. Mr. Gerlach? Aye. Mr. Gerlach, aye. Mr. Price? Aye. Mr. Price, aye. Mr. Buchanan? Aye. Mr. Buchanan, aye. Mr. Smith? Aye. Mr. Smith, aye. Mr. Schock? Aye. Mr. Schock, aye. Ms. Jenkins? Ms. Jenkins, aye. Mr. Paulson? Mr. Paulson, aye. Mr. Marchant? Mr. Berg? Aye. Mr. Berg, aye. Ms. Black? Ms. Black, aye. Mr. Reed? Aye. Mr. Reed, aye. Mr. Levin?
No.
Mr. Levin, no. Mr. Rangel? Mr. Stark? Mr. Stark, no. Mr. McDermott? Mr. McDermott, no. Mr. Lewis? No. Mr. Lewis, no. Mr. Neal? No. Mr. Neal, no. Mr. Becerra? No. Mr. Becerra, no. Mr. Doggett? No. Mr. Doggett, no. Mr. Thompson? Mr. Thompson, no. Mr. Larson? Mr. Larson, no. Mr. Blumenauer? Mr. Blumenauer, no. Mr. Kind? Mr. Kind, no. Mr. Pascrell? Mr. Pascrell, no. Ms. Berkeley? No. Ms. Berkeley, no. Mr. Crowley? No. Mr. Crowley, no. Mr. Marchant? Mr. Rangel? Chairman Camp?
Aye.
Chairman Camp, aye.
The clerk will report the vote.
21 ayes, 14 noes.
There being 21 ayes and 14 noes, the motion is agreed to. H.R. 9 as amended is ordered favorably reported to the House of Representatives. Without objection, staff is authorized to make technical and conforming changes to the bill. Without objection, members will have an additional 2 days to file with the committee clerk supplemental, additional, or minority views. So ordered. There being no further business before the committee stands adjourned.